Eric Muather at muather.com with about 1 hour to go before the close of Friday's session. This is how markets are cold, slightly down for the day. We shall see how we close. Let's take a look at those charts. So here we have US market analysis for the weekend of September 17th and September 18th, 2016. For the Nasdaq, we can see that it is the major average as far as the US markets are concerned that is showing the best strength. And you can even draw a simple line connecting RSI lows. This past week, we found that the market did get much needed support on that line. So this weekly chart is doing its best to stay above the support line. As long as markets are above this RSI level, the market should be stable at worst. And it's only until such a time as when we break below that line that we can really start expecting lower prices. So for now, the Nasdaq is doing exactly what it needs to do to find support. On the monthly time frame, we can see that the Nasdaq is the only major market in the US that is positive for the month. As long as it is positive, it has a chance of continuing to push higher. So this is good. It's the only market that is up. The Dow and the S&P continue to be red. So this market is giving bulls a chance to believe that they can see higher prices. If we take a look at the Dow weekly, you see that the Dow is coming back to test the same line the Nasdaq found support. So this line here needs to hold. So we are exactly on that line. If the market can bounce above that line, that would be bullish. Otherwise, a break of that trend line week to week might suggest to expect a big down week and maybe a change in direction, change in sentiment. Markets could be headed lower if we do not hold this RSI line of support on the weekly chart. Also, on the Dow weekly, we need to hold RSI 50 just like we did here. And once we held here, the market had a chance to move higher, and it did exactly that. So here we also see that the market is coming back to test RSI 50 on the weekly time scale. Bouncing off that 50 level and heading higher might suggest that we might actually be moving back to new highs. So this is critical here. Either we hold the 50 line and try and test these highs here, maybe break through those. Otherwise, as we stated, a break of that 50 level and a break below this trend line would be a sell signal. If we take a look at the Dow Daily, we can see that this market continues to be very strong, holding support where it needs to. For example, take a look at the Dow Daily, holding support on the daily RSI based on RSI lows line, going back to August of 2015. So over the last couple of days, we've come back to this level, and market has shown a nice constructive double bottom support. So as long as this line is holding, this market continues to be very stable, and one can expect a bounce. It's only until such a time as we break through the support line that we can start seeing a true sell-off. For now, the market continues to be very stable, very encouraging for bulls. We also see that coming off the lows here of mid-February, this is where the market moved off the RSI level. So this slight movement in the RSI, we can track that for future bounces. And you can see that it held support on the green line here for this bounce. It held here with uniform activity support for the lows here. And you can also see again double bottom support on that green line over the last couple of days. And hence the market continues to be stable. So again, as long as market is bouncing on those two lines, the market continues to be positive and stable. If we take a look at the Dow from a RSI on the hourly chart, you can see that we seem to be having topside resistance. We discussed the market coming back to test this level here on, I believe that was on Thursday, and we were suspecting that the market would pull back. The Dow was trading at about 210, I believe. It hit this level and we were expecting a pullback, so we got that pullback. So we see topside hourly resistance coming into play. At the same time, we got bottom side hourly support. So the market seems to be stuck in a range, and until we break out or break down below this wedge, this market is range bound for now. Now we can also see evidence of this wedge if we take a look at the hourly chart for the Dow. And again, we see top side resistance. In fact, even at the highs of Thursday, the market hit that level. Since then, we were expecting a pullback, which is what we are getting on Friday. But if you take a look at the RSI lows line on the 30-minute chart, we are finding support coming into the last hour. So as long as we are within the wedge, the market is sideways. At some point, short term, a break of that wedge might be bearish. And also, if we can find enough energy to push through this wedge to the upside, that would be bullish. But as of late Friday, with 1 hour to go, the market is still stuck in this range, and we have to wait for more data to see whether we break out or break down. Let's take a look at the monthly chart for the Dow. The monthly chart, in my opinion, continues to be very bearish for the Dow. As long as the Dow is down for the month, we continue seeing a market that made a higher high on a monthly closing basis in terms of price action. But this did not correspond with RSI moving higher. In fact, the RSI made a lower high, and it also, more importantly, the RSI failed to move above, scratch that, 61.8 on its monthly. So this tends to be the worst type of negative divergence. As long as the Dow is down for the month and showing this negative divergence month to month, we should not be too surprised if we break the support levels on the daily and the hourly and we start pushing lower. The same thing can be said for the S&P 500. Right now, we see that it is still down for the month. We have the improvement to all-time highs on the monthly chart, but the RSI failed to make an improvement. RSI failed to move above 61.8. This happens to be the worst type of negative divergence. As long as this is the case, and as long as this chart continues to show this resistance here, you can expect that we've probably seen a major high for the market. So month to month, the Nasdaq and the S&P and the Dow continue to be very bearish. Given this chart, as long as this chart continues to hold, we can expect that the dailies and the hourlies eventually are going to be put under pressure, and that the market actually trends lower. If the market can actually turn positive for the month, that would suggest that picture has changed and the pressures point higher. Net, this monthly chart is very bearish as long as it remains to look like we are showing this negative divergence. And again, the best way to look at this is go back to that daily chart. Don't expect the market to drop until, or in other words, your best sell signal, if you're looking for a sell signal, is to insist that A, this trend line fails. This trend line has been holding the market over the last week with the double bottom support exactly where it was needed. And also, again, like the Dow coming off the lows, this was the entry in the market here. Again, off the lows here. And so a line from here should give support. And we see that this has been perfectly tested. Uniform activity support here, late June for the lows there, and the market went to new highs. We've come back here over the last week or so. The market has hit that level twice successfully. In other words, twice, forming a nice double bottom. So one should not expect the Dow, Nasdaq and SPX to be on sell-off mode until such a time as when we break below those two lines. So net, daily charts continue to be very constructive. In other words, we are sideways as far as the daily time frame is concerned at worst, and you can see that this might eventually lead to a break because of the pressure of the monthly chart. So to summarize this analysis, as long as the S&P 500 is down for the month, expect lower prices, expect that eventually we break through here. Otherwise, this support is good enough to turn the S&P 500 monthly chart positive, and that would be good because a breakout is what the bulls need above the recent monthly closing high, and that would be a breakout above 2173.60. So a breakout above that level would be bullish. For now, we are down for the month. For now, we are showing negative divergence. Net, if I was to make a mistake, I would make a mistake by being short. Eric Muatho at muatho.com. Subscribers, be on the lookout for part 2, which should have some stock ideas for you guys. Otherwise, for everybody, enjoy the rest of your weekend. Good luck as always. See you guys in the new week. Peace and riches blessings. Mwah. Blessings. Yeah.